It has been just over a year since the blowout at a BP well in the Gulf of Mexico triggered one of the greatest environmental disasters in modern history. BP survived the crisis, though, after unloading tens of billions of dollars in assets to raise money for claims and cleanup costs. Now the question is whether the new CEO, Bob Dudley, can bring the stock back to its pre-spill highs and whether new findings about who was responsible for the blowout may help BP's case. ING analyst Jason Kenney has been bullish on BP shares. He's on the phone with us from Edinburgh. Jason, BP reported earnings this morning. It's a mess, right? They've got all kinds of charges, and they had to get rid of a number of assets to help pay for these costs. Tell us whether or not the earnings report we saw today lends any confidence to your expectation that BP shares are the best buy among the big oil producers.
Well, certainly BP is looking very undervalued relative to its asset base. I think the results today show a very good cash delivery. They show a positive operating momentum from the company, particularly in the downstream business. And the upstream business, I think, is performing well under the circumstances, even with the divestment impact, even with the high-margin barrels not being in the portfolio at the moment, given things like the drilling moratorium in the U.S. Gulf of Mexico, for example. It's a good set of results today.
Well, one of the problems for investors, Jason, as you know well, is that since BP shares recovered somewhat, they've kind of stalled. And people want to know how long it's going to take for the value you see in the stock to be realized. What do you think? How long?
Well, we've still got two key things to kind of sort out with BP. The first is who is responsible for the U.S. Gulf of Mexico catastrophe. And there are obviously claim and counterclaim operations ongoing. We know that BP has asked its partners for $7 billion of reimbursable costs against Anadarko and MOEX, for instance. And the provision that they have in their numbers at the minute doesn't allow for any recovery of those costs, but that money could come back into the portfolio. The second thing, of course, is Russia, where there has been a stalling of the Rosneft share swap deal, and we're not quite sure what's happening there. So I think the market is applying some Russian risk to BP's share price at the moment.
It's so difficult to tell what is going to happen in Russia, and very difficult to game out the results of these claims and counterclaims over the spill. But talk to us about the Coast Guard report just a few days ago that cited Transocean for some serious safety failures. Does that suggest to you that BP may, in fact, be off the hook for some of the costs, and Transocean may have to kick them in at some point?
Well, indeed. It was the 22nd of April, I think, when the U.S. Coast Guard issued its report. It said that Transocean's maintenance operations and safety culture were open to criticism, as was the Republic of the Marshall Islands and the flag state responsible for certifying Transocean's Deepwater Horizon vessel. I mean, it does open up Transocean to maybe some claim for responsibility there. I'm not a legal expert, so we'll have to see how that plays out. Certainly BP will be seizing the opportunity to look at Transocean and its responsibilities in that respect. I think one thing that's positive from today is there's very little change in the provisioning from BP's perspective, only adding in $400 million of extra cost to the $41 billion that we saw provisioned at the end of last year. I think that's a relatively stable amount at the moment, and the market could actually breathe a sigh of relief in the near term that number hasn't gone towards $50 or $60 billion as some of the worst-case scenario analysis is looking for.
All right, Jason, the market is breathing a bit of a sigh of relief. The stock is up 1%. Jason Kenney, an analyst at ING, on the BP story from Edinburgh, Scotland.